think I gave you a signal in the morning. So I'm going to start with fix 75. Then once we're done, we'll move on to the next pair as quick as we can, as quickly as possible. Right. So volatility 75, not wasting much time on it, looking at it from the daily time frame. I always tell most of the guys in the class there that trading is all art. Once you master the art that is there and that is happening in trading, or that is required of you in trading, then you are now a professional trader. Being a professional trader is basically understanding the overall art uh, that is happening on the market. It's basically art. This is all art, right? So this was a swing lower high up there. This one was a swing lower low here, right? As you can see, like this, right? So once I have my swing lower high, swing lower low, you can see that overall they are bearish. Then here, what is happening here? It's basically internal structure according to the daily. So what they can do and what they normally do each and every single time, once they take out that major swing leg, they'll obviously give you a major pullback before a major continuation. Those are basic institutional things that you must know and understand. Right. So, um, what is happening on the internal structure of the daily here? Someone might not see anything that is clear there. Someone might not even see whether the market is going up or down, right? Which is actually not a wrong thing, because that's actually what you'll be looking at on the daily like this. It looks like it's something like consolidation or whatever. But the most important thing is for you to now go on the lower time frames to figure out what is basically happening there. Because what we are now looking forward to, when you're looking at the daily, we are looking forward for an adjustment, number one. Number two, we're looking forward for the market to come and tap an untapped supply or an untapped order flow on the market. So yeah, when we're talking about untapped order flow, that one was tapped. Then we also have this one here, and just stretch it like this. That's also a level where the market can pull back onto. Then this one is just a short-term one. This will be a short-term target for. So what I'm looking forward to right now on volatility 75 is a situation like, according to the daily, you see something like, can give us something like this. Then we go, we break, we go, we break, then we go, then something like this. So this is basically what I'm looking forward to, right? So that's just the daily bias. But now the most important thing is for you to understand what is happening on the lower time frames. Because what's happening on the lower time frames is what is going to determine what type of trade we are going to take now. Right. So if I go to the 4 hour, I want to get into more details of that internal structure that I saw on the daily. Remember, I gave you a sell in the morning. I gave you a sell in the morning. That sell, it's based on everything that I'm showing you right now. So here, when you're looking at the 4 hour, I can see something like an adjustment. I can see something like a break of structure. And then they came again to tap the lower high there. So here, this is a lower high there. That was a lower low. Then here they came again, they induced here. They induced there. They made this a what? A lower low. Then that one up there, it's now a lower high. So up there, they were mainly inducing to the downside from the top there. They were mainly inducing to the downside like that. Here they came, they wiped that. You can say this is the inducement ultimately. So you can see on the 4 hour, they are still sort of like in a bearish market, right? You can actually see that's a lower high up there. That's a lower high as well here, right? So here, upon this inducement, and also this inducement to the downside, one could have caught sales from here to here. You could have caught sales from there to here. You would have made money after this inducement. You'd have also caught the buys into the extreme levels there. Then once they tapped the extreme levels and failed to break them like what they did, then you actually could have gotten also the sales to the downside. So now the most important thing now is to understand that once we have induced to the downside, now we are now going to the downside. And once we have our confirmation to the downside, there is no reason that can stop us from going to the downside. Here, most of the levels they have been tapped, most of the levels have been retested, and now we are at this extreme supply here. That's what you're seeing. So that sell that I gave you in the morning, it's actually coming from is starting from here to the TP. If you check the TP that I gave you, it's around here. And I didn't just go to the 4 hour and did this. I actually went lower to the lower time frames, lower than the 4 hour, to get a perfect entry for that. So if you notice, my main analysis is always on the higher time frames. These lower time frames, all we do is to go for an extra confirmation if you need an extra confirmation, like here. If you see, this was an adjustment to the downside on the H1. So in essence, this will now be the internal lower high. This is the internal lower low, according to that movement that just basically happened there. So on the H1 also, you realize that here, as they were moving like this on the H1, they induced here. Let me just remove this H4 level there. Then you realize that on the H1, they actually changed character nicely, which is basically a double confirmation or double confluence of what we are seeing there. So here they now came and changed character to the downside, which is here. So after them changing character to the downside, you now know that they are going down. So they are now creating these internal lower highs and lower lows, and these internal lower highs and lower lows are being created by these adjustments. So here, even them inducing to the upside here, I was laughing with this other friend of mine whom I trade closely with, and I was showing him how we could have called the sell from up there, then also how we could have called this buy, and also how you can actually call catch. So once you now have knowledge and understanding, you catch mostly. If you want to catch all of the moves, it's okay, but you catch most of the major moves, you catch them once you now have the knowledge and understanding. For example, from up there, let me just show you a simple technique. So here, according to the 1 hour, that was an adjustment, that was a break of structure, then this was the change of character. So before they even come to change this character, you can see that the 1 hour adjustment up there was this one. Then all you do is you go to a time from like the 15-minute or even the 5 minute. You can go to 15 or even 5. You realize that there'll always be an earlier inducement. There'll always be an earlier inducement. Let me check 30-minute first. So that earlier inducement will be actually an earlier opportunity to actually sell that particular pair. So here they seem like the earlier inducement was basically here. So what you do now, once they induce here, if ever they were going to keep on buying, for example, here, if ever they were going to keep on buying, you know that they could have pulled back, they could have done something like this, pull back, pull back, pull back, then fail to change character like this. Then they could have simply done something like this, fail to change character, then shoot up, right? So if you caught that cell up there, so some of the entries that I normally enter are these inducement entries like these ones, whereby you enter there, you can put your stop loss up there, because now you're anticipating the market to keep on going. And also, as they give you another new internal structure or another new sub-internal structure, like here, once they did this, this, and this, now I know that this is my level. So it means I can even shift my stop loss from up there. I can even put it just within just above here. So they kept going because they can't induce up until they take out this leg. They won't induce up until they take out that leg. So they went down, went up until they changed character. Even after changing character, they came again to this leg, which was an entry that you could have also entered. So even those cells, you could have even held them up until the inducement to the upside there. So here, where you see them inducing to the upside, then now you come out of that cell. Then now this pullback, you know that they're now pulling back, which is a normal institutional principle whereby after changing character, we'll pull back to collect all the trend line liquidity as well as other forms of liquidity that will be there. This was a simple trend line, right? And notice this entry that I'm about to show you now, you could have entered this buy not because of the trend line, but because of this inducement to the upside. So yeah, this was the inducement to the upside. That was the break there. That was the inducement to the upside. After that, immediately upon the inducement, they could have bought. Stop loss, you could have put it here. Or if you go to lower time frames, 15-minute or 5 minute, you can actually get a smaller stop loss around these levels. You hold that trade up until they induce to the downside. Then here they came and induced to the downside. Then they went back up. So by the time they come to induce to the downside, obviously they would have first tapped the level like what they did there. They tapped that level, then they induced to the downside. Now we're in a sell, and this sell, it's just the same. They're repeating the same thing over and over and over again, but it's just that people, they are not well educated and well taught about how these things move. So now you see even this sell that we took, it's just a continuation of this overall move because we're coming from a swing lower high. So coming from a swing leg, we must approach another next swing leg, which is down here. So here the confirmation has happened, which is this, making this a lower high. And they've came to the extreme level, which is where our cells are. Our cells are up there. Where in the cells, our stop loss just above there, just for safety. Now we're just holding. We're just holding and wanting the market to. So even as it will be flowing there, you can even take advantage of sub-internal structure, whereby once it changes like this, you just shift your stop loss to the previous sub-internal structure leg up until they reach down there. As simple as that. As simple as that. As simple as that. So this is basically what I'm anticipating now on week 75. The high probability setup in the sense that it's a sell. We're taking a sell in a bearish order flow market, and we're at an extreme level. And most of it has induced, most of the things have happened already. So that's why it's a high, an A plus setup. That's why it's an A plus setup. So here, let me just go to 15 minutes or even 5 minutes. So you see something interesting there about that stop loss that I was telling you, that you could have simply used that lower time frame to get a smaller stop loss. Because according to principle here, that's the 15 minute or that's the 1 hour inducement, right? So before they come to induce, they will maintain this sub inner structure. Me, even the the buy that I even enter is even down here. Once they break this 5 minute leg, which is the 5 minute inducement, right? So this 5 minute inducement will be my first initial entry. So even if they're going to sell, they will give me those buys. Then even if they don't break there, it's fine, but I'll still have made money with the buys. But eventually they succeeded. So that will be my first major entry, is usually down there like that. So even the stop loss, it's even strategic in the sense that I just look at structure. That's a high, that's a low, that's a high again. So if I enter a buy on that leg here, my stop loss, I might not even need to put it all the way here. I can just put it here. This is how I attain even the high risk to reward ratio trades. So you see how you could have even notice the risk to reward there. It's one is almost close to 1:40, which is so much insane, so much insane. So that was the first entry. Then the next entry, that after that, I just follow my sub. You see, if you check here, they're now just following this sub-indicator structure. That's a high, that's a low. That's a high, that's a low. So yeah, they basically came to the previous leg there, which was an entry there, which was where your entry was supposed to be. And if you were going to put a stop loss based on that, it was basically going to be down here like this. That was also another high risk to reward uh trade like that, like this. So now they've changed to the downside. Even here, if I zoom in like this, right? If I zoom in like this, you can actually see that we have my inducement is here, which is good. We now have an inducement, which is good. Because if you notice on 15 minutes, if you notice on 15-minute structure there, as they were approaching that leg level, they never induced. So them inducing is also another confirmation, which is good for that level. So now we're just holding. Now all you just need to do is hold and hold and hold and just wait for the market to drop, 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 drop. This will also be a short-term target for that sell to the downside. Another very interesting pair that I'm looking at is Crash 300. I think I've been waiting for this particular setup for a very long time now, and I think I showed you how we are anticipating and waiting for a buy, a swing buy. Let me just go to 1 hour. Waiting for a swing buy uh, on Crash 300. Right? If you notice, it's almost on my level. It's on my level or it's almost on my level. It just touched my level there. Right? It just touched my level. I'm anticipating a swing by here because they've changed character here. You can see to the left. That was an inducement. That was a break of structure here. That was another inducement. That was another break of structure. Then they changed character to the upside. We now have a higher high up there. So now here, all you need now there, they've tapped our zone, yes, which is good. So all you need is you can go to 15 minute. Once you have that 15-minute confirmation there on the level, that's how you know that we are now shooting all the way to the upside. That's how you now know if you don't want any drawdown on that particular trade, you can just wait for that 15 minute. This 15-minute, you can wait for something like this. They take that, they come, they go. They can do this one, or they can even do this other one. They come, they break, they change, then they. So this is all you now need to see on 15 minutes for this trade to go all the way to the upside. Just wait for this, then you enter that swing buy to the upside. Other trade, which is very interesting, is the Boom 300, which is most probably going to be our last A plus setup for this particular session. Right. So here last week, if you remember, we took a sell. I gave you even the sell signal of this. And I showed you that we changed character. They actually changed character here. They induced here, they broke, then they came, they changed character. They came, they broke. They're now giving us these lower highs, lower lows. That was the previous lower high. We entered ourselves there. Now they are back. They did a pullback. Let me just hide this. So even this buy to the upside, there was a way to catch even this buy, which is the pullback buy. So here I'm basically anticipating them to touch this extreme supply for maybe the next push to the downside. That's a trade also, which is an A plus because the order flow is bearish. So us taking sales in a bearish order flow market, it's basically an A plus setup. So even that buy to the upside, there was a way of catching that buy to the upside, which was a pullback buy. Go to 5 minutes, you actually see where order flow basically shifted nicely there. You see here, that was the inducement on 5 minutes. That was the inducement on a 1 hour time frame. So before they induce the 1 hour, before they induce your higher time frame or your 1 hour, which is there, that's your 1 hour inducement, right? Before they induce that one, they induce the lower time frame first, which is basically the law. It's actually the law of time frames. It says that before we induce the higher time frame, we first induce the lower time frame. So yeah, they induced here. So I knew basically that if they're going to induce there, it means these are buys that are basically safe. So after this inducement, they did this pullback. After doing that pullback to this level, which was basically an order flow level, they tapped it, they boomed. So you could have bought even here, the stop loss was basically there. So buying there, someone could have targeted this as the first target, but then when you see them breaking there, you know that they're eventually going to your ultimate supply there, which you saw there. So that was basically how you could have caught that buy to the upside. Even other entries along the way, there were also other entries along the way. I'm not going to waste much time on those, but for now, we're looking forward for this. Once they tap that region, you just go to a lower time from 15 minutes. Once you see that shift, you just jump into that sell all the way to the downside. So those are the three major A plus setup that I'm currently seeing right now. The boom 300 sell, the price 300 buy. These are mainly the A plus setups that I'm seeing and the VIX 75 sell, which we are currently in. This one we're in already. This one we are in already. We are in already. We're now just waiting to see how it's going to move, but we're in already of that particular trade. So these are the A plus setups, and this is basically how just a brief summary of how we look at the charts. And I hope you're going to catch those moves, and I hope you're going to make money from those particular trade setups that I just showed you on those three pairs. So on the next session, we're going to cover some currency pairs in preparation of NFP on Friday. Of NFP on Friday, I believe before Friday we'll do a very intense session where I'll show you also how our prediction, what it is mainly for the NFP. What is my main prediction for NFP? I think I'll do an intense session to show you all of that. Why I'll be expecting a certain move on NFP on Friday. So we'll do a session on that. I think between tomorrow or Thursday, we'll do a session for in preparation for NFP on Friday. So guys, thank you for being here. You'll find the video just now on YouTube. In the next 30 minutes to 1 hour, the video will be there on YouTube. Just go replay, learn, and implement and make more money.